Mike Briggs is our cattle market analyst this week. Data for the month of January show the price for all fresh retail beef fell for the 6th month in a row. The average cost of ground beef passed a landmark by dropping below $4 a pound for the first time since July 2014. 2015 was not a good year for international beef trade. Exports were down about 12% from 2014. However, USDA believes global demand will be better this year, with increased U.S. production lowering prices. We talked with Mike Wednesday morning about domestic and foreign beef demand, profit in the feedlot, and the recent up and down movements in cattle markets.
We're kind of starting a little transition. I think we're coming into our spring rally. So, you got a little back and forth. Now, last week, the board never backed up a single day, tried to back up pretty hard yesterday and snapped right back. So I think we're in a pretty good situation. We finally got rid of the majority of the really big cattle, and we're starting into some dramatically tighter supplies.
Do you think this is going to be a little easier to market now maybe than it has been the last few months?
Let's hope so, because I know the captive supply numbers are also coming down, so the packers don't have those to lean on, so hopefully we'll see a little more competition.
If the heavier weights come down, there's still going to be more cattle this year. Production is still going to increase, yes?
Not during the next 3 months.
Sure.
I don't think so. I think the next 3 months are really going to be tight. Now, the thing everybody wants to know, when we're going to quit making these cattle big. Well, we're going to quit making these cattle big when the spread between cost to gain and what the selling price is comes together, and it will. But until that happens, I think you're still going to have big cattle. So yeah, you'll have a part of the year again where numbers come up and they're still going to be big, and we're going to shoot ourselves in the foot again, probably.
Later on this year, though, do you expect production overall to increase across the U.S.?
I think you're really a year away from that. I think next year's a year where you're going to see a lot more cattle, because I just think it's just going to take that long to do it. But you're going to see times where we've kind of, maybe stacked some cattle against ourselves, and that's going to cause a little problem in the market.
When do you think profit might return to the feedlot?
Yeah, that's a great question, because we're not there yet. I think you could see some cattle that are profitable in April, maybe the latter part of March, depending upon the performance. We've seen our gains haven't been hurt, our conversions have been hurt by the mud. So as it dries up and you get a little further into this thing, some performance will come back. I think we'll see this market get in the 140s. I don't know that we can get past 150, but I know we'll get into the 140s. I'm pretty confident with that. Some cattle should make a little money there. But after that, I don't know. I think it's going to be a tough deal, because the rancher's going to get to hold the dirty end of the stick. He's had the nice shiny end of the stick for several years, and he's going to get the dirty end of the stick here, because you're going to see feeder cattle really go down, and that's where your margins are going to come from. They're not really going to come from the market escalating, I don't think.
Do you think people are going to be more aggressive to place in the feedlot?
If they can see margins, they will. If they can't, I think that they're going to struggle.
What do you think you need out of demand in order for profit to return?
That's a great question, and we talked about this a little bit before we started. I'm really concerned that the retailer has never brought beef prices down relative to how much cattle have gone down. Therefore, we haven't stimulated the type of demand I think we need to stimulate to really push this thing higher. Now the retailer will say, oh, demand's just fine, we're doing great with and so therefore, if they can't raise their prices to the consumer, at some point there's going to be a squeeze there, and somebody's going to lose some money, which is probably going to be the packer. But it's just going to be really hard, I think, to force beef prices much higher, because they've never come down.
Your huge concern is that pork and chicken are just so relatively cheap.
And they're going to stay that way. Those two products are going to stay relatively cheap to beef forever. And I think what we did when we got this thing really high is you forced people over there. Now you got to get them back, and we've never dropped prices enough to really pull them back, and that's a concern of mine.
Are you buying any corn ahead right now?
Not buying any corn ahead, buying hand to mouth, because I personally don't believe corn's going anywhere. And so now you're getting to that time of year, well, what kind of planting conditions are we going to have? Earlier we thought they were maybe going to be wet, but the El Nino seems to be weakening a little bit. So maybe everybody gets in there fast and gets everything planted, and you got a lot of acres. Then this thing's not going anywhere unless somebody has a drought. So I don't get too wound up about chasing corn.
Any idea that exports might return here if the dollar loses a little strength?
You would like to hope. We need exports. We've got to have exports. They've got to be a key part of this on a consistent basis, or we're really going to struggle, because pork and chicken are so cheap.
So to recap, where do you see prices moving over the next 4 weeks or so?
Well, we're going to trade cattle, I think, this week somewhere between 136 and 138. I think eventually we'll get over 140 as we get closer to April. Supplies get tighter. Maybe we get a little bit better demand when it warms up outside. I think we'll eventually eclipse the 140 area, but I just don't know how far we can go past that.